This is Matthew Cratter from Trader University, and today I want to ask the question, will Bitcoin collapse the American empire? We've talked a little bit about this in previous videos. We've talked about how the US dollar is backed by something I call proof of war. This is an analogy to proof of work, which is what the Bitcoin miners do. Proof of war means if you try selling your commodities for something other than oil and you don't have a lot of nukes to protect yourself like China or Russia, if you try selling your crude oil for euros, your country will end up looking like this, whether you're Saddam Hussein in Iraq or Muammar Gaddafi in Libya. So this is one way that the U.S. enforces the usage of the U.S. dollar and inflicts it and creates global demand for the U.S. dollar, because in order to buy crude oil, for the most part still, you need to get your hands on some U.S. dollars. The U.S. can just print up money to buy oil with, but every other country has to actually earn these U.S. dollars, which is sort of a form of an exorbitant privilege for the U.S. because it can print up free money to buy crude oil. So I wanted to extend this to not just talk about what many people have called the American Empire, but the Roman Empire, and see how something similar played out there and whether it could happen in the U.S. as well. In the Roman Empire, it's sort of the peak empire part of it after the Republic. The standard silver coin of the realm was the denarius. This is where we get the Spanish word dinero from. And this is also the coin that's mentioned quite a bit in the New Testament. It's mentioned in the parable of the Good Samaritan and in Matthew's Gospel as one day's wage for the common laborer. You work for one day as a farmer or whatever, you get paid one denarius, which was the standard silver coin that looks something like this. There were different versions of it. If you're finding this video helpful so far, be sure to hit that subscribe and like button, especially if you're not currently subscribed to the channel. So the thing that happened with the denarius is it started off being mostly silver. It was originally, actually in the BC times, it was 95 to 98% silver, and then it was slowly debased over time. And what does this mean? Debasement of a physical currency, of a precious metal currency, means that the coin ends up containing less and less of the precious metal, in this case less and less silver. So by the time you got into the Common Era, into the AD era, you began, especially in the first century, under Domitian, you dropped down to 93%, and then by the second century, you were down to 83%, etc. So the denarius was slowly debased, and the silver content got lower and lower. Eventually, it was replaced by another coin called the Antoninianus. Sorry about the mispronunciation there. So the problem with this is the Roman Empire was a very big empire. It covered a lot of land, as we can see here, northern Africa to Europe to the Middle East, etc. So it was the largest empire at that the world had ever seen at that point. And to control this much land, you needed, obviously, a lot of soldiers, a lot of troops. These soldiers needed to be paid, and sometimes they were paid in salt. This is where the origin of the word salary, or the origin of people saying he's worth his salt, or something like that. But mostly they were paid using these Roman coins. They were paid using denarii, and other similar coins. Now, in order to make these coins, they couldn't be printed ex nihilo like the U.S. government does with its paper money. In order to make these coins to pay the soldiers, Rome needed to actually import the metal to make these coins out of, which meant some gold, mostly silver, and then increasingly a lot of bronze. Eventually, the empire grew so large and expensive to maintain that it became impossible to confiscate, secure, or mine enough metal to make these coins. And as that happened, and as government spending skyrocketed, the Roman Empire had a problem. The solution, because they didn't have digital currency like we do now, like the US dollar is a digital dollar, it's very easy to basically printing up a marginal dollar. An extra $1 has a marginal cost of zero when it's digital, but when you're dealing with silver coins, you actually have to use silver, or at least pretend to use some silver. So the solution that the emperors came upon was, rather than just having one silver denarius, one coin with 4 grams of silver roughly, which is about where it was when it started, you could end up with 2 silver denarii with 2 milligrams silver each, and then just add some other metal. And back in those days, it was obviously much more difficult to detect these kind of things, and the common people did not have the tools to detect this devaluation, at least at first. Now, as I said, this is a form of monetary devaluation. This is money printer go burr, and it caused massive inflation. At some point by the 3rd or 4th century, the denarius was mostly just bronze with just a thin silver coating that was easy to rub off. And so as the soldiers and other government officials figured this out, they demanded to be paid in more coins, combined with the huge inflation they were seeing, in order to make up for this lower silver content. Now, barbarians who began to poke holes in the Roman Empire, barbarians like Attila the Hun from up north, they demanded their ransom money in gold and silver. They would not take these debased coins. And so this was the problem for the Roman Empire. If you send all your silver and gold to the enemy and stop paying your soldiers with silver and gold, you end up having a problem. And there's a great meme that covers this. Roman historians blaming Christianity on the Roman Empire coming down, being brought down, which there is a plausible thesis there. But I like the Romans battling inflation here. Haha, money printer, go burr, where you have gold coins or higher quality coins coming in one end, and then lower quality coins coming out of the other side of the money printer. Now, the reason I bring up this historical analogy is I'm trying to envision, could something like this happen with the American empire? We currently are paying $722 billion for our defense, at least as of the last 12 months. And this is a huge percentage of the U.S. budget. It's been made much worse. The U.S. national debt's been made much worse by all of our military escapades in Afghanistan and Iraq, which combined must have cost something like $5 trillion. So more than 10% of the U.S. national debt comes from those rather bad experiments. Now, what happens if, and as I said, we're currently spending $722 billion on military and defense, and this is not even with fighting a major war anywhere. We're not fighting at least a hot war with China or Russia or any other major power. The purchasing power of the U.S. dollar goes down every year, and we've especially seen this over the past 2 years as the money printers have been on high. And so this creates a problem for people who work for the U.S. military. Already, you don't exactly get rich risking your life for the U.S. military. And so what happens if the U.S. dollar continues to lose its purchasing power as it has? You need to pay these military folks more and more just for them to break even and be able to afford the bare necessities like food and shelter, etc. So what happens if the U.S. dollar continues to go down in purchasing power? And what happens if at some point U.S. military troops stop accepting U.S. dollars? I'm not suggesting this is anywhere in the near future, but this is really what happened in Rome. And you have situations where Roman soldiers actually went and worked for the barbarians because they paid a lot better. What happens if Bitcoin continues to go up, U.S. dollar continues to go down, and you have this tipping point where Bitcoiners reach a level of wealth where they're actually able to outbid the U.S. government and other government for defense forces, like hiring a small army to guard a Bitcoin citadel where a bunch of Bitcoiners get together, something like this. If this were to happen, and the money printer almost ensures that something like this does happen, where the value of Bitcoin keeps going up and the purchasing power of the U.S. dollar keeps going down, at some point, many members of the U.S. military may decide that accepting pieces of paper from the U.S. government, especially if it's CBDCs and it's spy surveillance money, that accepting these pieces of money from the U.S. government is not worth it. And they may decide to go work for Bitcoiners instead. What you might envision is sort of, it sounds a little pejorative, but like Bitcoiner warlords or there's probably a better word than that. And you could see something like this happening because if Bitcoin becomes the most desired currency in the world, as gold and silver has been historically, and Bitcoiners can actually pay them in Bitcoin, and the U.S. government doesn't have any Bitcoin, you could have this sort of situation. It'd be very difficult as well for the U.S. government to confiscate a lot of Bitcoin from its citizens, especially if the citizens are holding their own private keys. You can go knock on the doors of 1,000 people or 10,000 people. It becomes much more difficult to go knock on the doors and try to confiscate the Bitcoin from 1 million people or 50 million people or 100 million people, especially if those people enjoy the privileges bestowed on them by the Second Amendment. So you could have a situation where a lot of U.S. citizens have Bitcoin, but the U.S. government itself does not have enough Bitcoin to pay people to defend it. If the U.S. dollar is backed by proof of war, as we said at the beginning of this video, and the U.S. can no longer afford to pay its military, what does that do to its currency? It makes the currency go down even more because it's no longer backed by the U.S. military. Goodbye, U.S. dollar. Hello, Bitcoin. And there's an important conclusion embedded in there, which is that the U.S. does not need to do something formally to recognize Bitcoin as legal tender for Bitcoin still to win. You could have a situation where the free market does its thing and more people demand the hardest, most sound form of money, which is Bitcoin, and it becomes de facto the currency that's used in North America as the American empire begins to break apart. There's the old joke, the golden rule is he who has the most gold rules. I'm going to revise this and come up with the Bitcoin rule. He who has the most Bitcoin can afford the best drones and nukes and soldiers and cyber hackers, all of which will obviously be needed in 21st century war. Hopefully those nukes won't be needed to be actually used, but just as a deterrent. So we could see something similar where currency devaluation leads to the collapse of the American empire in a similar way to how it led to the collapse of the Roman Empire. Now, if you enjoyed this video, I suggest you take a look at my paid Bitcoin course. If you want to go deeper down the rabbit hole, if you want to learn things about how you can protect, how Bitcoin protects itself from empty block attacks, the real reason that Bitcoin's so volatile, and then most importantly, how to buy Bitcoin anonymously. I have 4 lectures on that topic. I've started to add lectures as well on CoinJoin, which is not something I can currently discuss on this platform. So I just posted a video on the pros and cons of CoinJoin, and I'll be adding to that lecture in the coming days. I also talk about how to secure your Bitcoin using do-it-yourself multi-sig and much more. So if you enjoyed this video, you're going to love this course. I'd encourage you to check it out. I'll put a link in the description notes below that you can click on. You can browse these lectures. And if you're interested, be sure to use the coupon code YT99, as in YouTube 99. That'll get you the best price on this course, as well as getting you access to all of my courses. That one low price gets you access to everything for 30 days, including my Momentum Stocks course and all my courses on options and futures, etc. So you'll be able to browse those courses on IPOs and day trading, etc., as well as my flagship course for beginners, Learn to Trade Stocks Like a Pro, which will really take you from A to Z in terms of learning how to trade stocks as well. So you got the Bitcoin course and then all these stock, options, and futures trading courses. So I'd encourage you first check out all my free content on YouTube, and then when you want to go a little bit deeper, check out my paid courses. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.